So my name is Alistair Band. I am here from Blockchain Beginners. It's a company, a friend and I, Angus, who, funny enough, is in Scotland. It's a company that we set up together back in August of 2017. Yeah, a little bit about myself. So I got into the crypto space because Angus actually wanted to host a meetup teaching people about what blockchain and Bitcoin is. Asked me if he could use my office space, and I said yes, put my name against it, we'll pay for the beers and the pizzas. And we were expecting sort of 10 or 15 people. Now this was August last year. Very quickly on meetup.com we had 93 people attending, which meant we had to find a venue. The next day we had 230, and then we had to cap sign-ups at 350. And then we couldn't find a venue for 350 people. So we had 130 people at our first meetup. But yeah, it was a bit of a success, very popular, and then we did another one where we had a bigger venue, we had 350. Since then, the smallest audience we've had is 175. So there's certainly an appetite in the UK for crypto, I'd say. Basically, what we set out to do was make it more accessible for everyone. So just that kind of patter at the start about how you bought your crypto and what a daunting task it was. For your casual person coming into a new space about something that isn't physical and is intangible, it can be quite daunting. And you go on Reddit and all of the feeds on there are difficult to comprehend, shall we say, because you have the old school that have been there from the start and they know everything. And then you have the new people coming in. It's very difficult to decipher that information. And on occasion, it can be, you can open yourself up to some flack from the online community. It's very easy to hide behind a keyboard and be a hero and know everything. So we set this up to basically, follow me on Twitter if you want to, by the way. I'm looking for more followers. Also, Sweetbridge is awesome, but I'm not allowed to talk about them too much because I work for them. But yeah, so yeah, we started out to be educational, no bullshit, monthly meetup. So I know I just said I work for Sweetbridge, but they've not sponsored any of our events. We don't get any money from them. It's a completely separate entity, and that's the way we want to remain. We want to be independent, give you impartial advice, and not be influenced by third parties having a say in it. So if, for example, we were to be sponsored by an exchange, then we wouldn't be able to tell you about other exchanges. And that's not what we want to do. We want to make this as accessible for everyone and give you the full lay of the land, full market access. So yeah, we started on meetup.com in August, very quickly got to 200 members, and I checked yesterday and we're over 2,700 now. So look us up on meetup.com. It's London blockchain and cryptocurrency beginners. Yeah, so what is blockchain? That's what we're all here to find out, right? To understand what blockchain is, we have to, or why it exists and how it came about, we have to rewind back to the whole banking sector and how that works. So the traditional method for banking, as you can see up there, is a trusted third party in a centralized ledger. So way back in the day when banks first came out, you'd walk into a branch, deposit cash, someone would write it down and say, so-and-so has deposited X. And the value of the bank and the assets in their vault would be dependent on what that book said. Now, you're trusting one single party to hold that information for you and to not doctor it and to not change it. And you're also trusting that one single party with your money. And as we saw back in 2008, which was just prior to the massive rise of Bitcoin, funnily enough, you saw that they weren't exactly sensible with the money in the banks. So subprime mortgages, they were risking your money against what should have been like D-rated mortgages, calling them AAAs. And then one brick came out and the whole market crumbled and collapsed. So if you've ever seen The Big Short as a film, I'd highly recommend that. But yeah, that basically shows you what arseholes banks can be. Maybe don't stream that part online. I like my bank account. So yeah, anyway. The difference between blockchain and a centralized third party is that when you deposit your money into it, there's lots and lots of different server nodes out there. So these are miners that run computers that do mathematical equations to either build new blocks on the blockchain or to verify transactions. So when you send out that transaction, you have to get verified by a certain number of people for that to happen. Now, walking up to you in the street as someone that I don't know, I'm not going to give you £200 and say, look after this for me, because you might run off. I'm then making you a trusted third party. But as a collective, if we all say that I have £200, and as a collective, everyone has to agree with that, and one person doesn't agree, then the system still works because that's only one bad actor. Whereas if the majority agree, that's fine. But you then, to fraudulently make a transaction, you have to get more than 50% of the server nodes to agree with you. And the larger the blockchain, the more server nodes there are, the more difficult it becomes. So a little fact of information, Bitcoin blockchain has never actually been hacked. All of the hacks that you hear about on the news come from exchanges, which we'll get onto later about why you shouldn't store your coins on there, because exchanges use your standard web cryptography to look after your coins and tokens. So if someone accesses their web page, they can steal all your tokens from them. And once they're into cyberspace and off that exchange, you'd need a lot of computing power to track them, which, if it's a few £100, no one's really going to help you out with. So we'll get onto this later, but don't store your money on exchanges. So with distributed server nodes, that obviously means there's a distributed influence over the ecosystem. So if you end up with like one or two bad actors trying to throw things off and change things in that system, it cannot happen, because you've then got, say you've got 500 server nodes, and 2 of them are saying, no, you don't have that money, or we want that person's money. You then have 498 that say, no, fuck off, that's fine, deal with it. So yeah, it all still works. It's a method of consensus. Now, how do we get to consensus? A series of what we call hashes. So, I mean, the slide behind me is a bit of a giveaway, but who knows what a hash is and how it works? No? Okay, cool. Right, well, a hash function, they're always one way. And basically, you put a word in, and they generally have standardized hash functions. These aren't standardized hash functions because I just found one online, my apologies. But for the Ethereum network, you will always get back, I think, 12 or 16 characters in the hash function. No matter how long the input is, you get the same output in terms of number of characters at the end. But it means that if I type my name in there, you get a random mix of numbers and letters and stuff, and it's a one-way transaction. If I change the A to a lowercase a, the whole thing changes again. So that means you have to keep every single character in that pattern exactly the same for the hash to be the same as the output. So my name with a capital A will always put the same output. But if I change that, it changes. If I then try and hash the hash, i.e. trying to reverse it back, it doesn't work. So for example here, where I've got Sweetbridge is awesome, truth be told, I don't think that's actually the right hash. I think I just changed that part. But if you then hash the hash, you get another hash, right? So you end up with a lot of hashes and not very much. Like there'd be enough hashes in there that, yeah, you'd just be hashing about for ages. So anyway, I'm going to hash through this slide and move on. So why am I nattering on about hashes? Well, hashes are hashes that hash stuff. So I'm going to say hash one more time and move on. Actually, I'm not, because there's lots of hashes on this slide as well. Cool, so each block of the blockchain is built kind of roughly like this. This is a really, really simple diagram of it. So don't go home and try and code some Bitcoin blocks using this method here, because it won't be very secure and won't really work. But yeah, so basically, you have all the transactions that are in block 1 that go into the Merkle root, which forms here. And then you have the hash of the previous block header coming into here, which creates the block 1 header, which then goes into this hash of the previous block here, and all the transactions come in here into the Merkle root, and then this is all hashed, and then it's hashed again, and you hash and hash and hash. So by the time you've created multiple blocks, you've got a hash on a hash on a hash on a hash on a hash, and if you can't reverse one hash, or it would take a lot of computing power to reverse one hash, try doing that multiple times over to just do one block. Now, the main reason why Bitcoin's never been hacked is because it would take more computing power to hack into the Bitcoin blockchain than it would to just start building new blocks and making money out of building Bitcoin. So what's the point? I don't know about you, but you'd have to have something like seriously wrong with you to be like, do you know what, actually, I'm going to use all of this power, and instead of just making Bitcoins, I'm just going to mess it up for other people. So yeah, people don't really do it. Plus, generally, in my experience anyway, people in the crypto community are quite nice, other than the people that steal your money from exchanges or BitConnect. They're arseholes. Bitcoin was the first. I might have mentioned Bitcoin a few times here. It was invented by a chap called Satoshi Nakamoto. Now, this guy isn't actually Satoshi Nakamoto. He's a guy that has been vilified as Satoshi Nakamoto. I think he's like an English teacher or something, but he happened to live near some of the cypherpunks that were sort of rumored to be involved in the Bitcoin project, and I think there just might have been a bit of profiling on him done, really, with a name like Satoshi. But anyway, we'll move on from that. So white paper was released in 2008. It didn't actually hold any value until 2010 when it was valued at 6 cents. So if you bought some Bitcoin in 2010 at 6 cents, even $100 worth, you'd be a multimillionaire right now. So you have public and private protocols. So public protocols are anything in the public domain where you can log on online, you can search for blockchain records and see transactions happening. Now, these days with zero knowledge proofs, which I won't go into too much detail with because they're a bit over my head, so I won't really be able to explain them very well. But you can show records on a public blockchain that you can't actually see the record in it, and then it's assumed as true because there's zero knowledge proofs. So you don't know anything about it, but it's true. So hence why I'm going to move on from that. But yeah, public blockchains, Bitcoin, Ethereum, IOTA, although IOTA is not really a blockchain, it's a tangle, but we won't get into that either. And then you have private blockchains as well. So you have R3 Corda, which is debatable because it's in the public domain, but they implement those systems into banking and financial clients. And then, yeah, private blockchains, there are literally hundreds, thousands of them. We don't actually know because, funnily enough, they're private. So, who knows what the significance of these two images is? So we've got a landfill site, and we've got what I had for dinner last night. Raise of hands, anyone? Yes, sir. That is correct. So the pizzas was the first transaction with, actually I don't think it was the first transaction, it was one of the first. But it was pretty early days for Bitcoin. So way back then, early days, hint, cost a lot less money these days, and a landfill site. I'm going to Wales later. It was in the news, something to do with a Welshman. Anyway, when I first produced this slide, each picture was worth about $100 million. So someone once bought 2 pizzas for some Bitcoin, which at the time was worth about $22. I first wrote this slide when each image on their own was worth 100,000, but now combined they're worth about 100,000 because we're in a little bit of a dip at the moment in the markets. But yeah, anyway, so someone bought some pizzas way back when, what they thought was $22. In today's money, it would have cost them about 50 million. And then there was some guy in Wales that was mining Bitcoin off his laptop, had kept the hard drive in a drawer for a few years, and then had a clear out, chucked it away, and then Bitcoin went to the moon, as people say. And yeah, that hard drive is now worth about 50 million, and he's fighting with the council to try and get access to the landfill to try and dig it out. So basically, don't throw away your private keys. We'll get onto that in a bit. But yeah, cool. So as you can see there, we had a nice little peak before Christmas. It actually went higher than that on some exchanges. And if you saw the image there, we're at about 9,300 today. Thankfully, rallying a little bit because I looked at my portfolio yesterday. I was like, I want to die. But yeah, it's not been the story of Bitcoin and blockchain itself, and the reason why there's so much angst about the regulation right now is because it has a bad rap. So I think Interpol said that 5% of cryptocurrency transactions, 5% of all fraudulent / money laundering transactions or crime transactions or something in the world were to do with cryptocurrency. And they're like, oh my God, that's so bad. But it's like, okay, well, 95% are in fiat currency. So, you know, it's not a big deal right now. But people don't like it because they can't trace it and it's something new and they don't understand it and they're not in control of it. But it also wasn't helped by this guy, Charlie Shrem. He was arrested in 2016. I think the crimes themselves actually happened in 2013, which was basically he made the mistake of acknowledging that he was selling Bitcoins to someone who was then going to buy drugs with them from the Silk Road. Now, the difference between that and a cash machine, because a cash machine on every corner, as soon as you take your cash out, they don't know where that cash is. Each individual note is not tracked anywhere. And in terms of financial volume, the largest use of cash in the world is actually to buy drugs. So they just basically pinned this guy down because it was something new. And he had sent a text message to someone being like, yeah, that's fine, buy drugs with it. Well, I'm ad-libbing there. That wasn't exactly what he said. But he basically incriminated himself and said he knew what he was doing with it. So if you're going to buy drugs with crypto, don't acknowledge it to anyone. Or just don't buy drugs. Drugs are bad. But yeah, moving on. So how does something that has no physical presence or you can't actually see it other than on a computer screen when it says you have 1, 2, 3, 4, 5 or 0.5 or a tiny fraction of a Bitcoin. How does something like that actually hold any value? It's very tough. We grew up in a society where you need to hold something, you need to see something, you need to be there to understand the value of something. That's where pounds came from. It came as a unit of measurement. So a pound of gold was 1 pound. That's how the whole fiat currency thing started out. US dollars, I don't know, I'm not American, but that's how our currency started out. So how do you pin a value on it? It just goes back to the old saying, supply and demand. If people want something and you have it, and more people want it and more people want it, the value of that goes up and up and up. Anything where there is a limited supply and there's a demand for it, the value will increase. I don't think back in 2010 or 2008 when the white paper was written for Bitcoin, anyone expected it to be as big as it has. But that being said, it's been a fantastic advert for blockchain technology in itself. The meteoric rise of Bitcoin has meant that people now understand what blockchain is, and they start looking beyond the fact that it's $9,000 right now or hit $20,000. You now have people coming into the space and seeing what other applications can we use for this technology. So immutable records on the blockchain for land registry, for medical records. Now these are cool projects. These are things that you should be looking into. So before you start looking into these projects and potentially wanting to invest some money, I mean, that's why we're here, right? The Crypto Investor Show. How do you even buy crypto? As we discussed at the start, very briefly, you guys missed it slightly, but it's fine. So yeah, you need to find a fiat crypto exchange. What I mean by that is fiat currency like pounds and dollars, not cars. You can't swap a car for crypto at the moment on an exchange, but you can exchange crypto for a car. Anyway, so the most popular one in terms of exchanges is Coinbase. With Coinbase, you actually get the physical crypto itself, which is always nice. There are some places where you get CFD, which is contract for difference, and eToro now you actually do get the actual crypto, but you can't really send it out of eToro, etc. But eToro are great, they're sponsoring this event, so anyway. The joys of Coinbase is that you can just sign up with a debit card and buy crypto instantly, it turns up in your account. The downside is it's pretty fucking expensive to do so. But that being said, before you start thinking, oh, I'll just do a SEPA transfer and pay 0.25% on GDAX, look at your bank details and see what they'll charge you for a SEPA transaction. Because if you're with NatWest, they'll charge you £20 for a SEPA transaction, which then, if you're buying less than like $500 worth, it then becomes not worth it to do the SEPA, so just use your debit card. It's quick and instant. So other options include GDAX, which is actually part of Coinbase. So if you buy on Coinbase, you can move it to GDAX free. You've also got Bittrex, which is apparently coming soon. I think in the US they've just launched fiat to crypto trading. Kraken's always a good one. In terms of the UI and like user experience of making trades, it's dog shit. I wouldn't recommend it. But in terms of sending some Bitcoin there to get fiat currency out, it's actually probably one of the best. Yeah, there's plenty of others. And as I said, beware of the SEPA charges because they'll creep up on you and you won't see them. So, how do you buy altcoins? Who knows what I mean by an altcoin, by the way? We've got anything else apart from Bitcoin? Yeah. So, altcoins are, you're correct, anything else apart from Bitcoin, or some people are now saying apart from Bitcoin or Ethereum. So, the two major players there, they hold the vast majority of the market share. Therefore, altcoin is an alternative coin. So to do that, you have to use a crypto-to-crypto exchange. These generally have much more pairings because it's easier to either build a crypto-to-crypto exchange or a fiat crypto exchange where you just have the major players on it. So personally, I'd recommend Bittrex, Binance, or KuCoin, but that's my personal recommendation. That's not financial advice. There are other choices available, of course. Do your own research. Where should you store your coins? Well, I was nattering on earlier about how the only hacks on the Bitcoin network have been through exchanges, so don't leave your coins on an exchange. If you're looking to get really into this space and invest lots of money in it, I would highly recommend getting at least something like a Ledger Nano S. So this is a hardware wallet which is only connected to the network when it's plugged into your computer. As soon as you disconnect it, your coins are safe. The only person in charge of those coins and who can touch them is you. So it's down to you to keep hold of this, which I don't know. Personally, I like to be in charge of my own stuff rather than having other people look after it for me. But yeah, I'd recommend them. Trezors are also quite popular, but personally, I've never actually played with one, so I wouldn't know on that one. But as a bare minimum, use my Ether wallet, but it's not the most secure. But whatever you do, do not leave your coins on an exchange. So what does an ICO do? So who knows what ICO... It's up there on the board, actually. So who knows what ICO stands for? Anyone? Yes, initial coin offering. So the difference between this and an IPO is when you go into an IPO, that's an initial public offering. When you do that, you actually get a share in the company. So if you were to buy all of the shares that are offered in an IPO on a stock market for a company, you would then take control of that company. The difference with an ICO is you don't get any control of the company. You don't get any stake in the company whatsoever. So what this means is a lot of people have just been using it to raise money with no actual benefit for you as a token holder, other than you're giving them some money and it might hold a value to other people that want to buy that token because they feel like they need to have that token because it's popular. Beyond that, that token could potentially have absolutely zero value or purpose. So be wary when you're looking into an ICO, basically. Do your own research. What I mean by is it a security or a utility? That's more so for the American investors because you can't have securities, etc. What I mean by is it a utility? I mean, does it actually have a purpose? You holding this token, does it bring some economic value to you? Can you use it for something? Like Binance tokens, they reduce your trading fees, or you get free trading fees if you're buying currencies with Binance tokens. Therefore, it has a value. Hello? Oh, sorry. Like, does it actually have a value? So at Sweetbridge, our tokens are going to be used in our ecosystem as a discount token to reduce interest on loans, etc., which you could potentially, by staking them, bring that down to zero. So therefore, there would be a value behind holding the token beyond just giving us some cash so we can make our project. That, to me, is key. And I think also look into the team as well. The team behind it, the developers, the people in charge of the project, the people raising money, their advisors. Are these legitimate people? Do they have a business model behind them? Have they built businesses previously? Or is this a 28-year-old bearded guy that's just stood at the front of a room chatting shit on a Saturday morning who wants to get some cash to go on holiday? I'm not doing an ICO, by the way. That was a joke. But you know, do your research. Are they actually going to deliver that project? If they don't deliver anything, all that money you put in for zero controlling stake in that company is now absolutely worthless because no one's going to buy it off you. So how do you invest in an ICO? Well, firstly, do your own research. Watch videos online, fine, get other people's opinions, get experts' opinions, but do your own research. There's nothing more infuriating working in the crypto space and speaking with people that just regurgitate information that they've watched one video online, or they have one person who they follow and they just regurgitate that information and take it as gospel. Like, they might not have understood a project. It might, they might have got one thing wrong or missed something out that you could pick up on, and it could be a fantastic project, but this one person says it's bad. Do your own research. Similarly, this one person, like, who's heard of Trayvon James? A massive shiller of BitConnect, which went tits up. But he had a lot of followers, and a lot of people lost a lot of money because they listened to that one person. Do your own research. BitConnect, clearly a Ponzi scheme. And yeah, a lot of people bought into it. So yeah, do you believe in their business model? Do you believe in their team, their structure, how they're doing things? Do you like their roadmap? Do you think that that's actually possible? Are they going to be able to deliver what they say they will in the time frame they say they will? Does it solve a real problem as well? We have a lot of people that think, blockchain, crypto, let's raise some money, let's tokenize something that doesn't need to be tokenized. So don't tokenize it. It'll probably work. A lot of projects out there would work better if they were not on the blockchain. This is not a be-all and end-all. It is Web 3.0. We are in the fourth industrial revolution here, but it doesn't mean it's the right solution for every single application of it. So think about whether there will be an actual uptake from it. Are they trying to change an industry that's too ingrained in them to not do it, to Like they have a system that already works absolutely fine without blockchain. Is there longevity in what they're building? Is there a future in it? Or is it a flash in the pan? It's going to be there for a year and then it's done. And then are they likely to run into legal issues? This is another good one as well, because no one knows what the heck the SEC is trying to say. No one knows what HMRC's opinions of it are. Are they pushing the boundaries of what you think is morally acceptable? Are they trying to throw over the system or overthrow the system and get rid of the banks? Or are they trying to work alongside them? Are they trying to work with the legislators rather than fighting against them? If they're trying to partner with them and work with them and provide a solution alongside existing infrastructure, chances are they'll probably have more longevity than someone that wants to overthrow a government. Just my personal opinion there. Can you find their team online? This one's quite funny. The name's slipping my head because it's a Saturday morning and it's before 10 a.m. And I've only had one coffee. But there was an ICO recently, and on their advisors page, you had a lot of people whose pictures just definitely didn't match their namesake. Like it was, there was definitely something fishy going on there. And then one of their advisors, I think it was their financial advisor, their CFO, their picture on their team page of an ICO that had already raised nearly $1 million was a picture of Ryan fucking Gosling. Right? So do some research. I mean, I'm not certain on this, but I don't think Ryan Gosling's advising any ICOs under a pseudonym. So, yeah. Also, how big is their team? If it's 2 people, they're probably not going to deliver anything. If it's 1,000 people and they're trying to raise 100 grand, they're not going to last very long because, you know, people need to eat and get paid and pay their rent and shit. And are they a registered business? If they're not even a registered business, then essentially you're just giving money to some guy on the street that says he's going to do an ICO. So, you know, in a space like this where it's so easy to send and receive money, often quite anonymously, it really is down to you as a casual investor to do your research, make sure that you're safe, because you have no comeback from the banks whatsoever. These days, like if you make a card transaction, your product doesn't arrive or anything, your bank will give you the money back. In crypto, your money is gone. Unless you personally know the person that you sent it to, and same as if you send it to the wrong address, that money has disappeared forever, you're not getting it back. So there's multiple stages to investing in an ICO. You have the private sale, which is usually the first stage to open up. To private investors, you normally have to have quite a lot of cash in the bank anyway. And private sales generally run for the duration of the crowd sale alongside all the other stages. Then you enter pre-sale where you have to register. Well, you have to register for all the stages, but register for pre-sale. Often there's quite a high minimum to get in on pre-sale, but you get a fat discount. Then there's public sale, where everyone that's whitelisted, you just a lot of times you sit online until 3 in the morning, speaking from personal experience here, for the crowd sale to go live, and then the Ethereum network crashes, and you stayed up really late for absolutely nothing. But sometimes you do get your tokens, and it works out really well. So pretty much all sales involve KYC and whitelisting. If an ICO doesn't do any sort of KYC means know your customer. That means they have a record of who sent the money from where. If they're not doing any of that, don't send them your money because they will probably get shut down and you will lose all of it. For them to be a legitimate business and not get shut down by the SEC or whoever it is, they're going to need that information from you. So don't worry about hiding yourself, hiding your own information. Just be above board and don't do anything illegal yourself and you'll be fine. If the project doesn't want that information from you, they're doing something that's not above board. So I personally would pass. Again, not investment advice. Do with your money what you want, but that's my personal opinion. You should be able to do the whitelisting up front. Again, raises eyebrows if they don't do KYC and whitelisting, etc. And keep an eye out for whitelists that open up. What some friends and I do is we've got like a kind of a mini pool where if one person gets in on a whitelist, we share that information around and then kind of pool our money together and put it in. It's purely based on trust. There's no smart contracts. So again, don't do that with people you don't know. But it's difficult for everyone to always get into projects. Sometimes there's multiple of us that get in, so we split our funds and all try, just sort of hedging our bets against it. So the majority of ICOs these days raise money on the Ethereum blockchain. That might change in the future with other blockchains, but they're all ERC20 tokens. Now, what that means is if you've got a Ledger Nano or a Trezor wallet, your tokens will show up in there, even though it's Ethereum. So you just put them into your Ethereum wallet, and those individual tokens will show up there. What that means, though, is a lot of people get them confused and think that if you send these ERC20 tokens to your Ethereum wallet on an exchange, that you can store them there, or like you send funds from. So ICOs will always send your coins back, not always, but most of the time will send your coins back to the address that you sent them funds from. So if you send the money from an exchange address, Ethereum, they'll try sending their tokens back to that exchange, and then you've lost all your money because that exchange won't recognize them, they won't show them up. I'm fairly certain Coinbase has a bit of a racket going with other tokens, etc. So don't lose your money. Beware of scammers. John McAfee, highly recommend following him. He's actually hilarious. But firstly, this isn't John McAfee, and no one does this. Like, again, this comes down to using your brains and doing your own research. If it sounds too good to be true, chances are it probably is. You wouldn't, if I came up to you in the street and I said, look, give me 20 quid, I'll come back in 5 minutes with 200 for you. You'd tell me to fuck off, right? Well, maybe not, but if you wouldn't, then maybe start doing that. Yeah, this isn't true. You're not going to get your money back. People start jumping on it, being like, oh, thank you so much. Oh, that was amazing. Yeah, they're also scammers. Don't listen to them. Anyway, so that was a little side note there. But yeah, how do you invest in ICO? Going back to that, beware of gas and gwei limits. If there is a limit put in place, good ICOs should penalise people for overdoing it, but a lot don't. But just be wary that if you have your gas and gwei limit, like that's how much you're willing to pay for that transaction to go through. If you're a miner, like someone that computes these transactions and says, yes, they're okay, who's are you going to process first? The person that's paying you more money or the person that's paying you less money? Probably the person paying you more money. So be sensible with it. Don't massively overpay on gas, but also don't sell yourself short and potentially miss out on an ICO. Yeah, they should give you good guidelines. I'm being told off for talking too long here. That's a story of my life, really. My girlfriend says the same thing. So in summary, do your own research. Believe in the product. Don't send funds to the wrong place. Don't get scams. And hopefully, go to the moon, as the saying goes. So yeah, basically, the onus is on you here, really, on each of you individually to, I'm going to get a bit sort of philosophical here, but we're in a space right now that is under a lot of scrutiny, has a lot of people saying there's a lot of bad actors in the place because you can very easily disappear into cyberspace and disappear off with people's money. So in order for us to me personally, I think this is becoming mainstream, but we're not there yet. Until you don't know that it's blockchain you're using, we're not mainstream. Once we stop thinking, oh, I'm going to use blockchain for this, like the internet on your phone, you open up an app, you don't even know it's connected to the internet, you don't dial into it. Once we're there, that's when it's mainstream. But until we get there, we need to rely on each other to look out for the scams, to warn people about them, and to not fall for them. If we stop falling for the scammers will probably stop trying. Well, they'll try different methods, but just be smart out there. Don't get conned, don't lose money. Yeah, so I've waffled on for a bit. We don't have time for questions. So if you want to get hold of me, just jump into my Telegram channel. Tap me up on Telegram or Twitter or whatever. My Telegram and Twitter handles, my personal ones, if you want to contact me directly, it's just @beardontheblock because, I work in blockchain. I've got a beard, if you needed that explaining. Other than that, I'll be around for the next sort of half hour, 45 minutes. So please come and grab me. Thank you.